The Bitcoin hype train destination $100,000. Bitcoin is buzzing again. Traders are whispering about a price surge. Some say it could reach $100,000. It's a bold prediction. But the market is feeling optimistic. There's a sense of history repeating itself. Why? Because gold is on the move. Bitcoin has shown a curious correlation with gold. When gold prices rise, Bitcoin often follows. This pattern has played out before. In 2019, gold jumped 15%. Bitcoin then surged by an unbelievable 170%. Later it rallied another 344%. Could history repeat itself? This time the stakes are higher. The global economy is teetering. A recession looms. Yet, Bitcoin enthusiasts remain bullish. They see a future where Bitcoin breaks free from traditional markets. They believe it could become a safe haven asset, like gold. Gold, the unsung hero of Bitcoin's ascent. Gold has long been considered a safe haven asset. Investors flock to it during times of uncertainty. It's a hedge against inflation. And when the economy looks shaky, gold shines even brighter. Bitcoin in many ways is following in gold's footsteps. The gold leads, Bitcoin follows theory is gaining traction. It suggests that gold's price movements can predict Bitcoin's trajectory. While not foolproof, the correlation is hard to ignore. This pattern is fueling the current optimism around Bitcoin. However, there are warning signs. The Bitcoin to gold ratio is flashing red. This ratio compares the price of Bitcoin to the price of gold. Currently, it's showing a bearish fractal pattern. This pattern suggests that Bitcoin could drop to $65,000. If things get really bad, it might even fall below $20,000. Decoupling, Bitcoin charts its own course. Bitcoin has always been a maverick. It exists outside the traditional financial system. It's not controlled by governments or central banks. This independence is both a blessing and a curse. It makes Bitcoin volatile and unpredictable, but it also makes it resilient. Recently, Bitcoin has shown signs of decoupling from traditional assets. In April 2025, President Trump announced global tariffs. The stock market plummeted. Gold also took a hit. But Bitcoin rebounded. It seemed unfazed by the chaos. This decoupling is significant. It suggests that Bitcoin might be maturing as an asset class. It's no longer simply following the whims of the stock market. It's charting its own course. This independence could make Bitcoin even more attractive to investors seeking a safe haven. Navigating macroeconomic uncertainty. The global economy is facing headwinds. Inflation is stubbornly high, interest rates are rising, and a recession is looming. These macroeconomic factors could impact Bitcoin's price. The Federal Reserve is caught in a bind. It needs to tame inflation without triggering a recession. Its next move could send shockwaves through the markets, including crypto. Bond traders are betting on interest rate cuts. They believe the Fed will pivot by September. This expectation is keeping the markets on edge. If the Fed doesn't cut rates, it could trigger a sell-off. This would likely impact Bitcoin, at least in the short term. Despite the uncertainty, Bitcoin enthusiasts remain optimistic. They believe in the long-term potential of crypto. They see a future where Bitcoin becomes a global reserve currency. Only time will tell if their vision will come to pass.